This is David H. Smith for the senior analyst for the Morgan Report, and we are in interesting times for sure. They can be very confusing for investors and all of us really, and so hopefully this will make it less confusing for you, and you can see the possibility for certain sectors of the resource sector which might shine more than others coming forward. And be aware that any action that you take or do not take involves risk. So don't feel if you don't do anything, there's no risk, because there can be risk even in that if your assets deteriorate due to inflation and monetary and political principles. So we're going to focus today on metals, miners, uranium, and the blockchain, which are the areas that I feel have extraordinary potential over the next 2 to 3 years at least. I'm the senior analyst of the Morgan Report with David Morgan, and we offer a newsletter, an annual letter, and also a free weekly letter. Just write to support at themorganreport.com for either one of those pieces of information. Here's the disclaimer that we put at the front of all of our presentations. These are the assumptions that we're going to be working on, that this is not a usual bull market. It's going to be volatile up and down, but on the balance, it's going to be massively higher over the next few years. And would like to see as many of you as possible in that winner's circle. Some people are going to leave too soon, and some are going to stay too long. So we try to find that middle ground where you capture and maintain most of your gains. Planning ahead will help you become more successful than just trying to wing it through the whole thing like the majority of people do, or not even thinking as you're going through it, operating on emotion rather than intellect and planning. These are the two things you cannot afford to lose. You can't afford to lose all of your investable funds so that you can't be a player anymore, and you can't lose your emotional, psychological capital. If you lose number two, you could have 10 million in your account and you'll fritter it all away because you won't be able to deploy it properly. So when you're going to be bold, try to be right. In other words, don't just jump into something emotionally. Everything has really changed because of COVID. It's starting to get back a little bit. I don't know that we'll ever see normal. And that's not just because of COVID. It's because of the paradigm shift that we're going through with the blockchain, with new ways of analyzing stocks, with new ways of looking for and producing gold and silver and uranium. Everything is up to change now. It's a complete paradigm shift. So just embrace the change, even if you can't keep up with all of it, but do your best to stay on the path rather than ignoring what's going on, and don't dismiss things without a little bit of a deep analysis. For example, saying that Bitcoin is a scam or it's going to zero. If you believe that, that's fine, but come up with deeper reasoning than just saying that, because something else is going on that I think that indicates that probably neither one of those very superficial assumptions is going to play out and be correct over time. Something that helps me a lot when I have to offset a position that I want to make sure I don't have too large an amount of, or if I have a leveraged position, I don't want to take a chance on losing too much money. I always remind myself it's important that I make money, not how much I make. So I focus less on how much I'm going to make on a position and more on the fact that I want to be in the green with as many of my decisions as possible. Do not wait for the market to give you the information where everybody else has it, because if you act then, you'll be buying with the herd, and that's the last thing you want to do. There are several free essays that are offered to you by writing to this link. This is just one example. I have one out last week and this week also that has been taken out of some of the writings that I do for Money Metals Exchange and for the Prospector News. And you're welcome to request these for your own reading. There's no charge to you. David Morgan always, and I recommend as well, that you get physical first. So if you're just starting out and you don't have any metal or any stocks, get some physical first, even though you may have to pay a little bit more for it, go through a reputable dealer. And then after you have that, which is your insurance policy, then your mining stocks, if you have funds left over to have a brokerage account and invest, that's going to be your investment portfolio. You can see the size of the gold mining industry in relationship to all these other entities out there. I mean, just look at the size of Facebook, Amazon, Netflix, and Google compared to the gold mining industry. I mean, there's not even a comparison. They could swallow it. Any one of those companies could swallow the whole industry in one gulp, and you could add silver to that, and it wouldn't be much larger. And look at the debt. This is what's driving so much of the tides of inflation and deflation at the same time. We're looking at stagflation, I believe, like we had in the 1970s. Those of you old enough to remember it and participate in it, I think we're going to see the same thing with even more pronounced consequences. Higher nominal metals prices by far, and perhaps higher interest rates over time. Hard to believe now with them in negative territory, but I think that's where we will end up. Here is the most reliable indicator of future price inflation, and this is the Fed admits this themselves, are agricultural commodities, foodstuffs. And what food is showing us now is that we have very high inflation not too far ahead. In fact, it's already insinuating itself into the economy. Go to the grocery store and see if you agree with me. This is a slide that I left in that I did for primarily Canadian citizens to make them realize that they have a lot of advantages that Americans don't have in their trading. And those of you that are in Canada, just take a glance at this and maybe pick one or two bullets out of it and think about it. You really do have advantages, but you have to know what those advantages are. I would like to teach you a little bit today about how to learn to fish, and one of the ways that I can do that is to have you look at people who have been and done before, like Eric Sprott and Mark O'D of Oxygen. Mark has put in half a dozen companies into production from exploratory stage, and the way he does it is quite unique, and the number of people that he has on his staff with their experience is really amazing. These are people that have done it before, and you can, if you learn how they think, you can become a better trader. Later on, there'll be an essay that you can have along the lines of what I mentioned earlier, the best of breed geos. I think you will really learn a lot from that. I know I did in writing it. Here's the book David and I wrote, David Morgan co-authored, Second Chance. And this is going to give you an opportunity as we get into the bull market further to maintain most of what you earn rather than giving it all back. We have a specific strategy for not overstaying your welcome in the market. And it's the only book that I know of that deals with this. And not only that, but in a way that relates to our human emotions. It doesn't go against the way we operate as human beings. Misu no kokoro means mind like water. I took this picture of the bay a couple of years ago, and the whole bay and the whole sky is reflected right in the water to the point it almost looks like a painting. But that's where you want to try to be. You want to be very calm when you're making your trading and not react through emotion. We never get rid of emotion, but we want to absolutely control it when we're making buying and selling decisions. Once you make that decision, you've got your plan, you've lined it out in a way that fits you emotionally and financially, then you go ahead and you act on it. A lot of people come up with a great plan, but they don't act on it. A lot of people were going to buy Bitcoin at 3,000, at 500, at 10,000, at 25,000, at 40,000, and now it's 57,000, and they still have not acted. It's getting to the point where it's getting late in the day to do that. And the longer you wait on something you've already decided on, the greater the risk as you finally get to the point where you don't do anything except buy at the top, and that is not a good strategy. That's a very bad one. Here's the demand supply things that the analogy that I use is a subduction zone where the demand for copper, gold, and silver, and nickel and other metals is driving underneath the surface of the actual availability, and that creates all sorts of stress and supply stress, and we're going to see that work itself out explosively over the coming years. You can see that the grade has been decreasing, the grams and ounces per ton for the last decade. This chart mirrors what I could show you for gold and copper. So they're working on more ore has to come out of them in order to get the same grade that they did just a few years ago. And that's what's driving exploration because most of the big discoveries have already been found. There are a few more in the pipeline, a couple of which I'll mention in this report. But the number that we used to find in 1 year, 10, 15, 20 years ago, is much, much more than now. In fact, there have not been any real major discoveries turned into production in recent years compared to what we saw 30 years ago. They're still smaller and they're less frequent than ever before. And this does not augur well for an industry where every ounce they sell means that's one ounce less ounce they'll ever sell unless they can replace it somehow. You can see that in spite of COVID, that in the Asian exchanges, the SGE, that the gold and silver accumulation continues without letup. This is the thing about silver, which really, in many ways, is the most attractive metal out there today to speculate in and invest in. Silver is the only metal. I think I'll have a chart later that'll show you this, so I won't go over it twice. But when silver demand increases, as it has now at the retail level, it's just not possible for the very few primary silver companies to ramp up their silver production very much. And 70% of the silver comes from base metal companies that produce copper and gold and other and base metals. So they don't how much silver they have is contingent upon how many base metals that they produce. Here's the ratio. We could see, if we see $10,000 gold, we could have the same ratio of 40 to 80 that we see right now in silver, and silver could trade for several $100s an ounce. So don't think it's impossible or ridiculous to think that we'll see anything over $50 silver or even $100 silver going forward. I really believe it's possible we'll see a spike to several $100s sometime in the next few years on silver. I know that sounds impossible, but if your picture isn't big enough and it happens, you're going to leave a lot of money on the table. This is what I call $26 to $49 silver as volcanic tremors like Mount St. Helens did when it was getting ready to erupt. And above $50 is a pyroclastic eruption, which blows the top off of everything, including the price and the availability. Once we have that happen in silver, I think you'll see inflation dollar-wise very rapidly, well beyond that point. It may take a couple times to punch through, or it may go through like a knife through butter, just like it did between $19 and $29 about 5 months ago. Everybody thought it would take months to have that happen, or maybe a couple years, but it simply didn't. And I think that could happen now, where we see $50 silver, and then in a short while we see $75 silver. All you have to do is look at the way Bitcoin behaves and get some kind of a sense of why that could be a very real possibility. Here's a chart I kind of inferred a little bit a while ago. If you look at everything on this chart, the change, the 2021 highs, and how they've been exceeded from the 1980 highs by hundreds of percent. And now look at silver. It doesn't make any sense. It's less than half of where it traded dollar-wise in nominal dollars in 1980. Something is out of kilter here. I would say to you, everyone listening today, not a human being alive, including myself, knows what the real value of silver is or should be. But I believe it's many, many times above what it is now. And that's why where it'll end up, I think, will be absolutely shocking, because there have been factors that have kept it down for so long, it doesn't make any sense. And of all the metals on this board, it's one of the top 3 or 4 that are the most necessary for us in modern society. And yet look what's going on. It just does not compute. Therefore, that gives you an indication of why this is such an asymmetric trade, where a small amount of money could yield amount of potential profit all out of proportion to what you would expect. Here's the gold saucer chart. It's been backing and filling, going down now a little below 1,700, but it still has that potential to move forward, and I think eventually we'll see targets well beyond 4,000. Jim, 16,000 gold in by 2025, and I don't think that is at all beyond the realm of possibility. Look what's happened here. This is the visible gold demand on the bottom, but look what the other demand is, where we don't know where it's going, into private vaults, into holes in the ground, into cookie jars in the bathroom. A lot of gold is being taken out of the market and not coming back in. Here's the breakout between the miners in relation to gold. By definition, miners should be more, they should return more because they're riskier than the physical gold, but they have underperformed for the most part for many years. And here you see this massive wedge that shows that underperformance. It's been going on since 2006. So it's been about 15 years, and now look at it. It's breaking out very decisively, which means that the efforts you put into finding and investing in quality gold, silver, and uranium and copper plays should reward you more greatly in relationship to that same behavior you might have done over the last 10 years than it did then. So you're going to get a kicker. You're going to get higher metals prices, higher miners prices, and higher miners prices in relationship to gold. Here's another tailwind. You see the gap between the juniors and the seniors? This is abnormal, as you can see on the chart. All the way back to the very beginning of the bull run in 2001, there was a gap like that then, but that gap closed and it stayed relationships stayed pretty close to each other all the way down to about 2014. And then look at that opening, which is still there. So that means that if you have a quality junior that you find and invest in, it will return more for you on a percentage basis than a senior will. And that will keep happening until this relationship gap gets closer together or closes. You can see the ratio here played out a different way. Look how far out of kilter that is. It's really anybody that really understands investing and risk reward will salivate at looking at this chart because they never had that opportunity since 1983 through 2008. They didn't have the opportunity that you have today with a modest amount of money and taking your time to do the research, making a plan and executing that plan in a calm manner. Look how long this relationship has been out of kilter. The longer that something is out of kilter and the farther it goes in the wrong direction in relationship to where it normally is, the more violent will be the reaction and the more powerful and the overshoot that will take place becomes even more so as time goes on. Here's another way to show it. You can see it still out of kilter. This is where we are by that little yellow circle and where we're likely to go based upon previous gold and silver bull markets. And Marion Katusa did an excellent job on this chart. So if you think it's too late to get in, you are sadly mistaken. Get your planning going, get your coins lined up, get a plan, subscribe to the Morgan Report, do other research, get on YouTube a lot and listen to people. But you just might surprise yourself at how much you can tuck away over the next few years with all the stuff that's going on with mismanaged investment by central banks around the world and massive monetary printing and disruptive political scene and the social scene and food prices, going out of kilter. What more can you ask for the potential for what could become the biggest metals bull market in our lifetimes, even if you're 80 years old? I profile a couple of companies here. I have shares in this company. I wrote part of the back cover, which was an honor for Bob Moyarty, and I was attributed to it on the back cover. It's a wonderful book, Inside the Greatest Gold Discovery in History, and I think time will prove that this is not an exaggeration. It really has that potential because it has the size and the potential and the relationship to what waters ran in Africa, which is this part is in Australia, which is connected when there was just one continent, millions of years ago, and it's the same type of setup for where the gold is being found there now in Western Australia. This is a 400-ounce doré bar that's first pour from a few weeks ago from the mine there for Novo Resources that was poured in Western Australia. The first of many, many, many doré bars in my view. Here's the palladium chart. It shows what happens if you think prices can't go any higher from a certain level. Nobody had ever seen palladium above $1,100, and it dipped a little bit, and then all of a sudden it went up to almost $3,000, and today it's trading at almost $2,400 a couple of years ago. You could have held on with part of your position, and you could have taken 2 years to get out of it. But if your picture wasn't big enough and you couldn't imagine palladium above, $1,200, you're out of the market and you missed a $2,000 move. Don't let that happen to you with silver. Don't hold on to all of it, but don't get rid of all of it until you really are certain that your picture has been big enough and realized by Mr. Market, and then consider it. But be careful about getting out too soon with everything you have. The same applies to certain mining stocks. Here's a picture of David Morgan and myself in Argentina, and looking at some greenfield research. And David, this is important. David has done a lot of research on this. He indicates that as much as 90% of the profit potential of the entire bull run comes in the last 10% in time of the move. So when you think the move is about over in a few years, remember that that final blow off probably hasn't happened yet, and the last 6 to 9 months could return more for you than the last 15 years did. It has that kind of potential. So be careful about jumping out with everything too soon. And here we go. This statement, I think, is something you should really, really not forget. 6 to 9 months at the end is where that blow off really happens. It happened in the 2000 market tech wreck as well. This is important. You learn to sell when others are buying, which is right now, and actually which was really a few days ago for sure. And then do the reverse. When everybody wants to own something, maybe you should sell some of it. Maybe you should sell all of it if you feel that this particular stock has gone way too far. But that's your decision. And then you also ask yourself, if I'm buying another company, is it going to give me Pareto principal return where 20% of my portfolio gives me 80%? Or is it going to be just an also ran? And maybe if you look at it that way, if you don't think it has that much potential, why buy it? Why buy it for a 10% return risking 100% loss? Here's the one I referred to a while ago. I wrote this essay, kind of proud of it. 4 best of breed mining geologists. I know all these people. And, I could have added a couple more in here, but 6 or 7 is a lot to talk about when you can only write about 1,100 words, that much space. These are 4 really great individuals. They've done it before. They're doing it again. Don't just buy something because they bought it or they're associated with the project. Consider their thinking process that caused them to get involved, and then ask yourself, how can I think like them? How can I be more successful? If you learn to think the way they do and look at things from their perspective, that's a guarantee I can give you. You will become more successful if you act upon that knowledge in a way that kind of correlates with what you're about. I started out with the uranium as a secondary focus. I still see it that way, although I wrote this essay about a year ago for the Morgan Report. We've done very well. We put 2 of the about 50 stocks in the uranium sector that turned out to be the biggest performers. I think both of them are up around 400% in the last year. We're in a correction right now. I'm thinking from the research I've done in the last few months that I was not bullish enough on uranium because of some things that have changed, not least of which where the state of Texas kind of froze itself with a lot of people. Some people actually froze to death. And they found out that windmills don't work when they're frozen, and they don't work when the wind's not blowing. And solar cells don't work to get energy from the sun when they're covered with snow, as Germany found. Germany had 30,000 windmills that wouldn't work because there was no wind. So these things are helpful to get energy, but they can't replace other forms of energy. We're trying to replace fossil fuel. Well, that's good to do, but uranium offers a solution to that is a lot more green, a lot safer now, and a lot more reliable than it ever was. And more people in the green movement are coming to see that is a potential solution for much of our energy problems, and that we'll never, ever solve all of it by building windmills that cover the face of the earth. Here you can see the uranium spot market bottoming slowly and slightly, but it shows you that unless there's another Fukushima, we're not going to see those lower price levels anytime soon, and who knows how high it'll go. My guess is someplace between $90 and $110. But what's going on now, the way other things shoot up beyond what we thought, like palladium, who knows? So you've got to be willing to accept just about anything, but if you can get on board this first big leg when it finally gets underway, you will likely make asymmetric profits. You can see the relationship here for nuclear and how it produces as much energy as coal or oil or natural gas. Just one little pellet. This is a item that is used. Well, it's not just used by Encore Energy, but I'm kind of profiling them there. This is in our portfolio. I own shares in it. Group Technologies, Group 11, is a privately held firm that has the same people in it, some of the same people that are also in management at Encore Energy and EnviroLeach Technologies. EnviroLeach is going to change its name very soon, and I'm going to keep you in suspense of what it'll be, but I'm telling you, I love the name change, and I love the new symbol, and I don't want to let the cat out of the bag before it happens. I know what it is, but I think it's great. I think it's going to help the company get their word out to a lot more people on a visual respect, because they do have something with their ability to do in situ recovery of gold and silver and uranium, and also their e-waste, which they're a leader in for taking all sorts of computer boards and TVs and everything else and grinding them up and getting the metals out in a way that is absolutely leaves almost no footprint, as opposed to burning them or burying them, which is what over 80% of all the e-waste is done nowadays. Group 11 Technologies is going to be doing pathfinding research to help these processes become even better. And the people that are associated with this privately held company are top notch. This is what happened about a month ago in Bitcoin, 58,000. It sure looks like we're going to see a higher number than that pretty soon, the way things are going. It dropped to 42,000, 43,000 about a month ago, and now it's all the way back up, I think, to 56 again. So where this thing ends, nobody knows. I've seen some pretty amazing figures. It's kind of getting late to get involved if you haven't already. But, you know, we have a couple of miners, Bitcoin miners and Ethereum miners that we have profiled in the Morgan report. One of them that we recommended just a few months ago has gone up about 500 or 600% because they mine Bitcoin, and they're very closely tied to the price of Bitcoin. When Bitcoin goes up, their share price tends to go up. So you don't have to buy Bitcoin to make money in the crypto sector. It's called buying picks and shovels. You know, it's the technology and the hardware that is used to create the Bitcoin, which is digitally mined. At the same time, we've got a run on gold and silver, not just in the United States, but in Canada and Europe as well, too, with premiums that are much, much higher than anyone thought would be possible. Who would have thought that the American Silver Eagles, which normally are about $3 over a coin, are now 10 to 12 if you can find them. Here is the change in view. I mentioned to you at the beginning that everything is changing. The blockchain is going to enable people that have never been able to have bank accounts before and save money to do so in a way that is very productive. And with gold and silver being backed in a particular project that David Morgan and I are associated with and have invested in, we think this is one of the best ways we've seen in order to do this out of the 75 or 80 other projects that have tried to do some form of what is now being done in this project. This project is called LODE, L-O-D-E, refers to the mother lode of a mining project. And now we have two digital coins, AGX coins and AUX coins, each backed by an amount of silver and gold respectively. Now they can be, you can buy many things with them. They're going to become tradable before too long. There are people in over 100 countries that have invested in putting money in physical silver and physical gold into these coins. And these coins are backed by the silver mass for the LODE AUX is backed by the LODE tokens. And those tokens are held for the long term. They pay out micro rewards as more AGX coins are sold. And they've even floated a bond here, which I participated in last fall, which pays 9% interest to loan out money in the bond form. So pretty exciting times. These are cryptographic coins. You can store the gold at different places in the world. You can sell your coins to get the silver. You can add more. You can use it if you believe in, as I do, in the much higher prices for gold and silver, which causes the coins to become more valuable. And it really is changing what we understand. It's another form of decentralized finance, DeFi for short. That DeFi is changing the whole world, the way we do finance. And I should have, but didn't get a chance. I've been remiss on this in putting a slide for BlockFi financial services on my presentation. It will be on the one I do next month. I opened an account with them last May and talked, to try it out before I wrote about it in the Morgan Report. And I'm very pleased with what they do. You send in your native currency, which they turn into the stable coin on a one-to-one basis. You can either hold that and get interest up to 6 or 7%, and it can be paid to you in Bitcoin if you want. Or you can buy Bitcoin with it, or Ethereum, or a couple of other choices that they have. I think a Litecoin is another one. And it's really, really a powerful investment model, backed by some of the biggest players in the business. So the Load project for me is just a very fascinating thing to be a part of and to talk to others about it, as is BlockFi. So the Load project is digital, private, high-speed, peer-to-peer, silver and gold money for everyone. The blockchain gold and silver miners, it's the first time that all this has come together, not just in one country even, but around the world. So people are acting upon this simultaneously for their own methodologies and their own desires and needs, and it's going to get bigger and bigger, and the runs on the underlying metals are going to be compressed. Instead of taking 5 or 10 years to have massive upside, it could be months or maybe a year or two, for this to happen. And when you think about it, what's in your pocket is not really money. It's currency. It's fiat paper money. Somebody else has a claim on that, the government. And they come right out and say, we want to devalue it. They don't say it that way. They say, we want to cause inflation to stimulate the economy. Well, inflation is a devaluation of the fiat paper in your pocket. So when you take that fiat paper and you buy gold and silver, or you buy gold and silver and you send it in or have it sent in to be turned into digital coins like AUX and AGX, you're not buying something like a car or a boat. You're exchanging an inferior form of currency that people call money for what's been honest money for thousands of years. And I believe, and it's not a big deal right now, and it can't be calculated, but I believe that third tailwind factor that's going to drive gold and silver to moonshot levels, along with the mining shares, because they produce this stuff, is going to be the unexpected demand factor by people buying digital coin, with metal-backed coins on the blockchain, because in addition to the fact that they like the value proposition, but in addition that many of them aren't going to be able to find physical silver to do, and they'll decide that buying a digital coin, which is backed by physical gold and silver, makes a lot of sense to them. And not only that, it's also highly competitive. So read George Gilder's book, Life After Google. He thinks a decade ahead of everybody else, and he's in his 80s now, I think, but he's still pulling it off. He's still thinking ahead of other people. And that book is a little bit slow to get through sometimes. He's pretty technical, and he's a deeper thinker than you and I are. But if you stick with it, it'll be worth your time to do that. I suggest a couple things here. Banking on Bitcoin is a YouTube special that will teach you a lot. And anything that Raoul Pal does, he interviews all the top people. Michael Saylor of MicroStrategies was the person that really kicked off institutional investment in Bitcoin when he turned most of his treasury into Bitcoin, bought some more, I think, around 40,000 Bitcoin. So he didn't just buy it a couple of years ago at super low prices and now is promoting it. and he's a real believer in it. So he's just one of several people. Andreas Andropoulos has been a long time exponent of the BlockFi, or not BlockFi, of the blockchain concept and of Bitcoin. And these people are real thinkers. And look at Ethereum and look at the people behind that. It's just a fascinating time to be alive. Yeah, it's risky, but if you don't do anything, it's even more risky. And if you're not going to get involved in Bitcoin and Ethereum, that's fine, but at least learn about it because it's going to change your life whether you want it to or not. And it's going to change banking. It's going to be better for all of us. I just closed on a house mortgage yesterday. It cost me thousands of dollars. It took weeks to get done. It was very complicated. I signed all sorts of documents. In a couple of years, instead of costing you thousands of dollars for a mortgage, it's going to be a few hundred, and it might be executed in a few hours. That's the promise that blockchain gives you, and it'll be immutably on there, and nobody can change the information. So pay attention. This is the most beautiful picture of a copper deposit I've ever seen. Only 20% of the world's copper has this kind of a makeup and grade, geologically speaking. It's so relatively pure that you don't even need to send it to a smelter. You can produce it into copper plate in situ. This is in Ecuador. This is a 22-kilometer strike. It's a ways from being turned into production, but it's going to be a big deal, I believe. David Morgan has an annual letter. He also has, for high net worth investors, he has a mastermind program, which is about 5 times as expensive as the letter. It's for people that get involved in private placements and things like this. He also has a free weekly letter, and we find that a lot of people that start out on the free weekly letter go on to take his report. I am a contributor to the report just about every month. I have, in addition to talking about gold and silver and uranium and copper stocks, we've introduced trading programs for those, which have turned out to be very successful for our subscribers. I have a column I do every month called Blockchain Brief, and keep you up to date on changes. And they're happening so quickly and so massively across the board. I've been following this stuff for 4 or 5 years, and I'm stunned at how fast things are changing, even as I do the research and learn about it myself. So I think you'll find it to be very fascinating. And David Morgan is up to speed on all this stuff. So he's got, some days he does 6 or 7 interviews. So he's all over the place doing that. I do a few myself, but he's the lead horse in this place. And you will learn a lot by listening to what he has to say. And he gives updates to subscribers, video updates. And it's a learning experience. Learning how he thinks will help you to become a better investor and speculator and trader. And you can get involved with this right now from your mobile phone. Just use this information and get hooked up. I think you'll like it. He has well over 50,000 people that subscribe to his free letter and read it every week and listen to him, because it isn't printed out, but it's he does it online. So I think you'll like it. You don't have to hold all the way at the top, and you don't have to buy at the bottom. I know an individual who did this. He bought silver at $11 and sold it at $18, and he made millions. He tore up and burned his charts because they weren't operating the way he wanted. And I didn't talk to him too much afterward, but I don't think he was upset that it went to 50. And you know what? He didn't give up a penny of his earnings. And I know people, myself included, who held on to 50 and ended up giving a bunch of it away when it dropped to 1080. So, be careful how long you stay in there. And I think Second Chance will help you to avoid the fate of so many people in the last bull market, and which will be the same fate this time around. So, take a look at the book, pick it up, and I think you'll really like it. And if you have a question or something, write to me about it at support@the-Morgan Report, and I'll be happy to answer a few questions for you on that. Here's the learning curve, the 321 memory law. If you don't do anything with what you heard today, write some notes down, consider about doing some research, maybe make a couple of trading decisions. Within a few days, most of it will have gone right out of your brain. You will have forgotten it, about 50, 60% in just the first few days. And then they get down to the bottom here, and you will have forgotten about 93% of it. So this is the same with any conference you go to, whether it's virtual or face to face. So please just do something to retain the things that you think are important. If you saw a company I profiled here and you like it, get on the internet, click the URL, go to the company, read what they have to say, call the IR, look at where it's trading on the charts. Do something that helps you build that information into your system. You may not like it, but at least you've got a new skill that you're working on. But don't just go watch TV and let everything go away. And the same thing when you listen to something on YouTube. I'm listening to people talk on YouTube all the time, and I'm taking notes all the time, and I'm applying a lot of what I hear all the time. And so I get better because I do this. If I didn't do that, I'd forget most of it, and it would just be kind of almost like leisure time, wasting your time doing that way. So please try to retain as much as you can. And when you get your plan, execute on the plan. Don't just sit there. Don't say, I wish I had done that, for whatever reason it is, because you're afraid or whatever. If the plan looks like it works and it makes sense to you, why not do something about it? You don't have to go all in. You don't have to get a housing mortgage and turn it into gold and silver, but do something. At least get some hold in your hand metal. It will make you smile when you hold a small gold coin in your hand, when you rub your thumb and forefinger over a silver coin, a bullion coin or a silver bar. You will smile. The people around you will smile because you will have the same feeling that people have had for thousands of years, that you're holding honest money in your hand. Thank you so very much. I appreciate your time, and I believe that I may have a few minutes for Q&A afterward. I'll be happy to interact with people. Is that correct, Donna?
Absolutely.
If you'd like, I can close out my presentation so I can see your screen, correct?
Not really. You can go to the chat box, questions box, sorry, and see the questions. Somebody else can please put David's crypto YouTube link into the chat box.
Okay, I've got attendees here, and let me see where I can find the questions.
Mm-hmm.
Do you want to read the questions to me, or can I see them, or what?
You can see them, or I can read them for you, up to you.
Okay, why don't you do that if you don't mind? I think you did that last time. That worked well. Now, let me ask you this. I can go full screen again with my first slide if you want. Is my desktop screen distracting from what you see?
Not really. That's okay. Okay. Laurel asking, what about rhodium and platinum?
What was that again, please?
What about rhodium and platinum?
I'm sorry, I didn't understand that last term.
Platinum.
Oh, platinum. Yes, platinum is an interesting play. I think it could go a lot higher, but the story of platinum, I think it's going to be used less, with catalytic converters being less of a problem. For people to solve in internal combustion engines and in diesel engines. So it probably has a bright future, but I think silver on a percentage basis has a much greater future and less downside. That's just my personal opinion. But I'm not saying don't buy any, but I'm suggesting don't overweight in it.
Maybe have the link for a crypto YouTube, David's crypto YouTube.
We don't have a crypto YouTube. The column I write is for paid subscribers to the Morgan Report, called Blockchain Brief. But if you go to YouTube, you can just Google anybody you want. You can Google Bitcoin. You can Google Michael Saylor. You can Google Andrei Andropoulos. I'm trying to think of the individual. He invented Ethereum before he was old enough to drive. I'm sorry. It's an unusual name, and I know it. I just can't think of it right now. When I can, I'll mention it. But anyway, there's a lot of different people that are very knowledgeable. Max Wright does a free tutorial out of Australia. You'll find people that you like, that kind of seem to fit with you better. there's another one. There's two or three different people that whose name escape me right now, but you'll find people that you really like. And what I like to do, Anna, is when I'm listening, let's say I'm listening to Michael Saylor, or I'm listening to Rick Rule, or I'm listening to one of David Morgan's talks. I'm looking on the right-hand side of my screen where you can scroll down and see a couple dozen other presentations, and I'll find one that I think, hey, I'd like to listen to that. And when I get done listening to the one I'm currently at, I'll go over there and click on that. So a lot of times you don't have to keep Googling. You just you get on there and they'll put other things that they think you might be interested in. They meaning YouTube, and then you can find one to click on, and then you'll get over there and do the same thing, and you'll be all over the place. So that's one way to not take a lot of time clicking. Having to punch in people's names. Just get started on one, and you'll find the others showing up.
Thank you so much, David, for the great presentation. You don't
You're
have any
welcome.
more questions on the way? So
It's
thank you.
been a pleasure to be speaking to people today. And again, if they have any, they want any of the reports, you can go to the link that I sent for that, and they're free. And then get on David Morgan's free letter, and I think they'll be very pleased.